Hey everyone, this is Jeff Praissman with Interactive Brokers Podcast. It's my pleasure to welcome back Scott Bauer from Prosper Trading Academy. Hey Scott, how are you?
Great, Jeff. How are you?
I'm doing well and I appreciate you swinging by the studio as you do on a couple Wednesdays a month for our 5-minute market recap. But a lot of stuff going on, right? And as always,
Um,
hopefully with an end in sight now that the Senate's passed the spending package. How are the markets handling this government shutdown, which has been the longest on record? As of now, with this new news that we got, what was it, yesterday or the day before? Are they really expecting to be over soon, or are they still hesitant?
to me, it really looks like traders and the marketplace overall are looking beyond this at this point. That yes, it will be over, whether it's in the next couple of days, whether it's next week. And now that earnings season has pretty much come to an end or the end of it, the focus is squarely on rates, the bond market, and what the Fed is going to do. So yes, I do think that the market is already pricing in that the shutdown is behind us. Again, whether that happens in the next day or two, next week, and now really looking ahead at the data points that we've missed and how that can affect the Fed in December.
That leads me perfectly to my next question. Obviously, in the news, and as it should be, a lot of the focus is on people not getting paychecks or aid that they need. And again, that, without being political, that's absolutely
Sure.
hugely important. But I think what a lot of times what maybe Main Street doesn't quite know or see is when the government reopens, like we're going to get a barrage of economic data released. Like in the meantime, economists are turning to other sources like the ADP report, which indicated a loss of, I think it was 11,000 jobs in the private sector. Do you think we're going to get like a big move in the market, either, or could we get a big move in the market, I guess, either positively if the government reports are better or negatively if the reports are worse? What's the feeling on that by the general market as well?
I think the market is looking that we are going to see some fairly sobering economic data coming out. I think we're expecting the worst, meaning maybe even a loss of jobs. I know that whenever the October non-farm payrolls come out, whether it happens to be this week or maybe next week, I think the expectation is actually for a loss of 60,000 jobs. Goldman just came out and said they expect it to be 50,000. I think the data across the board is not likely to be what we would consider positive data, but I see the market kind of pricing that in. I really do. So unless it's really off the charts negative here, I don't think we're going to see a big negative reaction in the marketplace.
So almost if anything, if it does beat expectations, then we could actually get another huge bump.
I really think that's the
Right.
case here. I think that's what we're setting up for, just because I don't want to say that the expectation is gloom and doom, but the expectation are for some pretty poor numbers out there.
And I want to switch gears a little bit. And how has the dollar held up over the past week, and where do you think it's heading?
Last week, we rallied to its highest point that we've seen since basically the end of July, and has edged lower a little bit over the last few days here. And really, it's coinciding a little bit now with what the expectations are for what the Fed is going to do in December. And with that probability, I think on the CME FedWatch tool now, it's down to about 61, 62% now. We're seeing the dollar back off a little bit here. Overall, though, Jeff, I think we've seen this incredible run back up from where we were. And now there's just a little unrest. There's some uncertainty there that's keeping the dollar right now hovering around that, let's call that magic spot of 100 or of 1 here. And I think the main driver of what is going to happen over the next few weeks here is maybe what we see in relation to the 10-year auction and how that may affect what the Fed might do. And obviously all the data that's coming out probably over the next several weeks.
And Scott, I feel like we can't go a podcast without talking about either AI or tariffs or both. So I got to ask, is the market following the Supreme Court and the potential impact on whether Trump's tariffs are legal or not? Or is it, again, a case where everyone just kind of, it is what it is, and we'll just ride with it either way?
I do think when I talk to the traders on the floor, it is what it is. But when you look maybe a little bit deeper, and boy, a year ago, we probably would have never used this. When I look at Kalshi, okay, they're saying that there's as of right now, only like a slightly over a 20% chance that the Supreme Court is going to uphold the tariffs. So considering how brutal that sell-off was back in April when, the tariffs were first announced, we could see a positive reaction if that happens. And I would be a little bit cautious of that. I don't think that the answer is quite so simple here, because the bottom line is the economic impact of these tariffs is still really largely unknown. Was it overstated? Is it understated? So I think the initial reaction would be we'd probably see a little bit of a buy in the marketplace here. Not sure that I would necessarily buy into that.
Yeah, I agree. And it's funny you mentioned Kalshi, because obviously we have our forecast trader contracts as well. And it's such that without going too much on tangent, that sector has really grown as far as market, using it as market data too, really.
Yep.
Scott, this has been great. Love you coming by for our Wednesday chats, and we'll see you next week. And for our listeners, you can get more from Scott at prospertradingacademy.com. You can go on our website, see past podcasts, past articles, and so forth. Thanks again, Scott.
Thank you, Jeff.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. There is a substantial risk of loss in foreign exchange trading. The settlement date of foreign exchange trades can vary due to time zone differences and bank holidays. The interest rate on borrowed funds must be considered when computing the cost of trades across multiple markets. Futures, event contracts, and forecast contracts are not suitable for all investors. Before trading these products, please read the CFTC risk disclosure. For a copy, visit our warnings and disclosures page.